Hi students, in the last class or in the last session we had discussed on the valuation of goodwill. Okay, so you know what about goodwill or all these things, you know that. Okay, so now as well as we discussed the methods of valuation of goodwill. Okay, so there are there are two methods, which are those valuation based on net assets approach and the valuation based on the profitability approach. Okay, so in this valuation of profitability approach, it includes the average profit method. Oh, okay, so as well as the capitalization of average method, as well as the super profit method. Okay, so these are the three mains under the valuation of profitability approach. Okay, so the first one is what's the average profit method. So this average profit method includes two more methods, which is the simple average profit method and the weighted average profit method. Okay, so now we will discuss as well as we discussed the simple average profit in the last session. Okay, so in this session we will discuss the weighted average profit methods, and as well as we will solve the problem on the simple average profit method as well as the weighted average profit method. Okay, so super profit method includes these four types. Okay, so first one is now see the simple average profit. Okay, so we will first of all see the simple average profit. Okay, so now in the last session already we discussed, but see now again, simple average profit is nothing but under this method previous year's profit and number of years are taken into considerations for calculation of average profits. Okay, so if it is profit is a fluctuating, then only the simple average profit is a using. Okay, so how to calculate the value of goodwill? So simple average profit into number of years purchase. Okay, so we should know simple average profit. Okay, for the calculation of the simple average profits. Okay, so now see how to calculate the simple average profit. So a simple average profit is equal to total profits of given year divided by number of years. Okay, so how many years are given for the profits? So this profit just added and divided by number of years. Okay, like this we have to solve the problem. Okay, so now see problem number 1 on this simple average profit. The following are the profits of Darshan Company Limited for the year the past 5 years. Okay, so these are the 5 years are there, and so the profit is given for the 5 years. Okay, for the 2010 it's a 3,50,000. Okay, so for the 2011 it's 4,25,000, for the 12 3,80,000, for 13 4 lakh, and for the 14 it's a 3,95,000. These are the profits. Okay, so the company was decided the value goodwill of the firm at 3 years purchase of the simple average profit of the past 5 years compute goodwill solution goodwill. Okay, so we have to calculate the the goodwill under the simple average profit method. Okay, so you know the formula. Okay, formula is what's valuation of goodwill simple average profit into number of years purchase. Okay, so first of all we should know simple average profits. Okay, we should know simple average profits. So first of all we will ascertain the simple average profit. So total profits of a given year divided by number of years. Okay, so now see simple average profit is equal to, for this 2010 it's a 3,50,000 plus 2011 4,20,000 plus for 2012 it's a 3,80,000 plus for 2014 it's a 13 for the 4 lakh, and for the 14 it's a 3,90,000. Make it total divided by 5 years. Okay, this total of this profit is how many rupees? 19,50,000 divided by 5 years. The answer will be the what? Average profit is what? Simple average profit is what? 3,90,000. Okay, so 3,90,000 for the each years. Okay, so now see valuation of goodwill, we got the average simple profit. Okay, so the average simple profit is 3,90,000 into 3 years purchase. Here given 3 years purchase. Okay, so the answer will be the 11,70,000. So this is the value of goodwill. Okay, like this we have to solve problems on the simple average profit. Okay, so next, take down the next. So weighted average profit. Okay, so weighted average profit. So what this is the second method under the what's valuation based on profit. It is the second method of the valuation of based on profitable approach. Okay, we finished the average profit methods. Now see this in that simple average profit also finished. Now see the weighted average profit methods. Okay, so now see the weighted average profit. What do you mean weighted average profit? When the profits of past year of a business are continuously either increasing or decreasing, under such circumstances the weighted average profits methods is used for calculation of value of goodwill. Okay, so it means what? So the profit is continuously getting increasing or continuously getting the decreasing at that time, so this weighted average profit is used. And when the profit is fluctuating at that time, simple average profit is a method is used for the calculation of the value of goodwill. Okay, so but if it is continuous more than, if it is continuous increasing or continuous decreasing, then weighted average profit method is using. Okay, so now how to calculate the weighted average profit methods? The valuation of goodwill is equal to weighted average profit divided by number of years purchase. Okay, so first of all we should know to calculation of the weighted average profit. So now how to calculate this weighted average profit? Total product of weighted profits divided by total number of weight. Okay, total product of weighted profit divided by number of years, you will get the weighted average profit. Okay, then you have to multiply per years of purchase. Okay, so now see in this we will see the problem. Profit for 4 years is, these are the 4 years and these are the 4 profits years. Okay, so weights against to each year are 2012 one weight, for the 2013 it's a 2 weight, for 2014 is a 3, and for the 2015 it's a 4 weight. Okay, then the value of goodwill is calculated as follows, assuming number of the years purchase is 3 years. Okay, assuming 3 years are the purchase. Okay, so now see, when using the weighted average profits, when the profit is continuously increasing or the decreasing. So in this case profit is going continuously increasing. Okay, so in 2012 it was the 1 lakh. Okay, for 10,000. Okay, so for the 2013 it's a 20,000, so it's a 14 for 30,000, it's a 7 15, it means it is getting continuously increasing. Okay, so at that time that's why they are using the weighted average profit method. Okay, so now see how to calculate. Just see calculation of weighted. Okay, so we should know weighted average profit. Okay, so for that purpose these are the years column, these are the profit year wise, and this is the weight. Okay, so now you have to calculate the total product. Okay, you have to calculate the total product of the weights. Okay, so now see, just you have to multiply. Okay, for the 2012 what's the profit? 10,000, and what's the weight? 1,000. So 10,000 into 1, it's a 10,000 only. Okay, for the 2015 what's the profit? 20,000, and what's the weight is given? 2. It means what, if it is multiplied it will be the 40,000. 20,000 into 2, it's a 40,000. Okay, so next for the 2014 it's a profit is a 30,000 and weight is a 3,000. Okay, so 3 into 30,000 it's a 90,000. Okay, and for the last one 40,000 is a profit and weight is a 4. Okay, so 40,000 into 4 it's a 1,60,000. Okay, like this you have to solve. Okay, now the total, see, weight, total weight is also, total weight is required. Okay, so total weight it's a 10 and product, total products value is a 3 lakh. Okay, so now put into the formula, weighted average profit is what? Total product, total of the product weights. Okay, total of the products, and what is the total of the product weight? Is the 3 lakh divided by weights. Okay, divided by total number of weights. Okay, so how many weights are there? 10 weights total. So 3 lakh into 10 divided by 10, it's a 330,000. Okay, so this is the 30,000. Now put into the formula for the calculation of the value of goodwill. So what is the formula? Weighted average profit into number of years purchases. Okay, so this 30,000 we got the weighted average profits into multiply 3. So in the problems they given, we have to number of years purchases 3 years. Okay, so this take it 3, so 30,000 into 3 it's a 90,000. Okay, so like this we have to solve the problem on the weighted average profit methods as well as the simple average profit methods. It will come for the 5 marks, and for the solution of the 15 marks or the 10 marks it's very easy. These are the, for the 15 marks or for the 10 marks, this is the working note for you. So like this you have to prepare the working notes. Okay, so I hope you will be understand. If you have any doubt you can ask me. Okay, and whatever we are solving the problem on this, whatever I wrote the problem on this word file, just we have to make you have to do the note down on your fair book. Okay, so all the theory as well as the problems also. Okay, so I hope you will understand. If it is not understand, you can contact me or message me. I am going to tell the solution. Okay, so thank you.